The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yep, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
Welcome, folks. Tom O'Brien, Steve Rhodes, and Darryl Martin, folks. Welcome to the Nadex Bull and Bear Binary Option Hour. We get the Dow right now up 40, Nasdaq's up 16, S&Ps are up 7.5. Gold is up $16 at $1,786. You got silver up 41 at $35 an ounce. Let's see. Oil's up $1.19 at 30 at 93.91. 33 would be a beautiful thing. Bonds down 4 ticks at 146.16. King dollar down 15 ticks at 79.32, and the euro is going to save the world, up 33 ticks at 130. What's happening, guys?
How's it going, man?
It's going great.
The euro's going to the moon.
The euro's going to the moon, yeah. I love it.
The DAX is taking it with it.
I'm telling you, man. Well, you know, it's going to get wild out here, you know, right now. I mean, I happen to like how this dollar just set up, because you got down there, rejected a low right now. The bonds are doing the same thing, you know, so we'll see where this battle ends up by the end of the day, no doubt.
Yeah, now the volume on the DAX yesterday, you know, what do you have? Because, you know, it's taking out its highs from September 17th now, which was 74.46, yes. You know, and it's up above it, you know, by 20 points right now. And
it had volume yesterday.
It did.
So this is what it had. If we look at the DAX at the 7,400 mark, 74.10, that was the September 12th level. We had 295 million. Now, I won't get the volume until later today, but what it was doing yesterday was pushing into that with 189.
Okay.
So that was an expansion as it's pushing into it. You know, we'll see if it actually gets what it needs today, but it certainly was pushing into it. Let me pull this back a bit. Oh, I see. Yeah, so it's going after those highs.
Yeah, pretty amazing, isn't it?
Yeah, no, and the highs we're talking about, folks. The DAX had triple topped in 2011. That's what it's going after right now. I can tell you this, the correlation, 74, so we're over the 74, so it's that shooting star. You know, this is one of your shooting stars.
Yeah, I know.
So check, well, this is wild, folks. Shooting stars love to get tested. And
they do.
It's really sick that they do, but the bottom line is that it's 75.23. So the volume correlation up there is pretty intense. 780. You know, I tell you, on a weekly, it's not that bad, actually. This is going to be intense because the week of the 14th, we did 983 million, and that's as good as any of them. You know, it really is.
Yeah. So I mean, it really wants to test the top of that May 6th area.
Yeah. No, it absolutely does. You know, and what's interesting is what's wrong with the the FTSE. You know, the FTSE can't. You know, just can't get it going. You know. And oh, look at this! This is going to be a beautiful thing. Oh, I love this. Let's go to our man, Mr. Larry Pesavento. Larry, what's going on, brother?
What's going on, Larry?
Hey, are you guys still in business?
Hey, it's a beautiful thing.
Listen, I was able to borrow your boat, Tom. I'm off the coast of Monaco right now. I'll be back in the show on Monday.
Yeah,
buddy.
Yeah.
And you better have your life jacket with you, man, because Bond's already turned around.
Hey, Tom, I don't know about turning around, but I have been in this business 60 years, and I have never seen what's happening with the transportations and the Dow Jones. I mean, this is something that is really big, and I just can't understand it. I really can't. I've never seen a divergence this big.
And so, folks, what Larry's talking about is this, and it's huge, okay? the transports right now at 49.51. Okay, so between Larry, Steve, I'm not sure if Darryl uses moving averages or not, but we don't. Okay, but if you do, folks, okay, if you do, the bottom line is that the 200. The 50, give me any moving average you want to give me, and the transports are done, folks. They're over, okay? So what Larry's talking about is that, okay, the classic Dow theory is that, guess what? If the transports are done, the market's done, So it is amazing, Larry. I mean, and they're done on volume. I mean, the acceleration down is pretty intense, so... I know what you're saying, but man, I'm looking at it, I'm saying to myself, this is as good as it gets, so...
Well, I have never seen it, and I was talking to Arch Crawford just a little while ago, and he was speaking with Richard Russell today, and Richard Russell said he's really afraid of what the implications of this might be. He said because it's so ominous.
Yeah.
This is how we ship goods. I mean, this is where the goods come from.
No, there's no doubt about it.
Yeah.
And what you have, folks, this is real goods, not virtual goods.
Yeah, this is not funny money, that's for sure.
Right.
Yeah, and folks, if you take a look at my chart here on Tiger TV, what you're going to see is the candles represents the transportation index. The red line is the Dow. So what Larry's talking about is just you can see the divergence. You can see how really the two pretty much follow each other. But ever since September 14th, we're looking at a daily chart here, has been just simply major divergence.
Yeah, something big is in the winds. There's no question about that, and no one talks about it other than people like Richard Russell and Arch and myself. Very few people even look at that. And utilities look like, they look like warmed over death. Also, they haven't even bounced at all, with the rest of the market. So something big is really coming, in my opinion.
Yeah. No, that divergence, man, is unbelievable. There's no doubt about it. It's
on the other hand, maybe it's a big trap that that it's going to turn around. If it is, it'll be a great buying opportunity, I guess. But it certainly doesn't look like it now.
No, it doesn't. And what you have out here, folks, is that even if we look at FedEx first, FedEx is getting followed through today. Norfolk and see, let me see this one. Norfolk just got absolutely smoked, man. What? And I should have this. Well, CSX. Let me go look at it first hit. Yeah, CSX is going south too. CSX, Norfolk come down. What, 10% yesterday? So let me see Norfolk this morning. Come on, baby. Where is she? Oh, this year. Okay, so NSC. She's down 21 cents this morning, which is not the end of the world, but yesterday she was down there. She was down there big. So, Larry, I guess what the real key is that the whole Dow theory always was that and the same with Richard Russell. They were always waiting for confirmations. Either the transports go or the Dow goes, or vice versa, right?
Yes, Russell's theory was that if the transportations and the Dow are the 30 stocks and the 16 stocks and the transportation shipping of the goods that the 30 stocks make. And if there's a divergence there's something not right.
Okay.
The utility is basically how much utility consumption is going on, but that's affected a little bit by the bond market because everybody was searching for yield. They were
big time.
So there's a little bit of an aberration there, but the transportation divergence, I've been watching this for quite a while. The transports, topped a long time ago.
Yeah.
And if we were at the same level on the the Dow that we are in the transportation, we'd be looking at around 12,000, I believe.
Yeah, no doubt.
There's something is not right. Either I'm 100% wrong or the market's 100% right, and I would bet on the market.
Well, there's no doubt the divergence is huge. Well, what's interesting is that it's not only just the divergence. We're all technical traders, but fundamentally, if you listen to what Fred Smith had to say at FedEx, it was a big deal. I mean, he was saying flat out that, hey, listen, man, you better pay attention to what's happening in China because, if we're not buying their goods and they're not shipping and they got storehouses full of stuff, well, you know what? Things are going to slow down. I mean, that was his mantra basically on the conference call. So it was my take on it, that it's been happening anyway, but it was interesting hearing him flat out say that he didn't think that people understood how much that meant to basically, right across the country.
Yeah, speaking of China, Tom, we had that big Gartley form down there, and we had a really nice 6% move off the Chinese index.
Yes.
Now we have turned around and gapped down below those indices. I mean, this is a major breakdown in the Shanghai market that's been going down for 2.5 years.
Right.
This is a real failure over there. I don't know what's happening there, but the charts are telling us a whole different thing than a booming Chinese economy. And
it went to a lower low last night, folks. And the low in the Shanghai market was 1658, folks. And we're going into it. We're at 2026 right now, and you're already into the highs of the lows bar. That's where we're at. Once you're in there, folks, particularly after a failure. So we're already 200 points into that bar. Well, guess what? It's going after that bar. And now, check this out, folks. We're going into that bar, too, Larry, right? With accelerated volume. See, that bar on a monthly basis only had 101 billion, okay? Well, we did 134 billion last month. And right now we're at, we're already over it. So, let's see. Yeah, you're already over it. So what is happening is that we're at 111 billion now. What do we get? 8 trading days left in the month. The key is that when you're coming into a bar like that, any bar, whether it's highs or lows, and you get heavier volume, man, that's saying that your probability goes up. It's going to smash it.
Yeah.
It smashes it. You're down to 998 Shanghai market.
Yeah, I could very easily make that easily, for sure.
Hey, Larry, would you say it's pretty safe to assume at this stage that the Bradley model's inverted from the what was expected to be a high in July?
Well, it's never been this far off ever, so I'd have to assume that. But it's not. It can't be inverted for 13 months, Steve.
Yeah.
That's the whole thing. It's down for 13 months. I mean, the timing that I've looked at has been absolutely. Horrible, because I thought August 3rd was going to be it, and then on, August the 13th, I said, well, we've got to, run for the bushes on it. But now, with all these patterns that have completed, and all the ABCD patterns, and the NASDAQ, and the Russell, and the Dow Jones, and the S&P, all the patterns are completed. The Bradley's not working in our favor, but frankly, I still have to go with the patterns. Bradley has always been, a timing tool that I value as a third tier after the pattern and the ratios. But boy, it's really hard to be long here. And when I looked at this, I'm getting ready to do the newsletter. When I looked at the transportation index, I hadn't looked at it all week, and I just couldn't believe that stocks could be up with the transportation index just getting absolutely massacred. And the utilities were down, every day with exception of yesterday and today. So, something's not right somewhere.
You stay right there, folks. We get Larry Pesavento, Darryl Martin, Steve Rhodes, myself. Darryl, you gotta. When we're coming back, we're gonna set up. You set up us a nice trade, all right, brother?
You got it, man.
It's a beautiful thing. You stay right there, folks. We're coming right back. We ended up 31, Nasdaq up 15, S&P's up 7.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Larry Pesavento, Daryl Martin, Steve Rhodes, and Tom O'Brien, folks. Welcome to the Bull and Bear Binary Option Hour. Right now, you got the Dow up 38, NASDAQ up 15, S&Ps are up 7.5. And Daryl, let's take a look. What are we going to look at today?
I'm looking at a few things right now. Just trying to figure out what the best setups are. Over here talking to Steve, too. And we're checking out gold right now. And it's at its one deviation level, 1788 is
okay.
The implied deviation levels that I use every day that are on point.
Yeah.
And so basically that means it's either going to take off or fall from this level. It's not going to sit here. And basically Steve's looking at a pullback to, what do you got, 1777 there?
Yeah, just as it's formed a real nice 1.27. We're just looking at a quick intraday 10-minute chart here, and both gold and silver have expanded from swing points to a 1.272 level. So, I say this level here either holds. Now, the way that gold came up into it, just on the 10-minute was with a number of kind of wider ranging bars as it came up there. So, this almost looks to me like it wants to actually trade up to maybe the 1.618 level. It's truly in overbought area, but just simply taking a look at the bars on the way up there. But if this is a level that could easily hold, like we did before a couple weeks ago. When we found trades that were sitting right at the precipice, and they would break one way or the other, and just simply trying to pick up the trade once the market made its directional mind for us.
Listen, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN, hit the Nadex banner. They'll put $25,000 into your account, funny money, so you can understand, how it works and what we're doing here, because this is the setup. I like this setup, because what happens, folks, with where we're going to look for is at the top of the box, because see, we hit the I want to see it press it one more time, but it hit the 1790. The 1792 is the number that it wants to hit, man. Do you know what I mean?
Yeah, exactly. And so, and then obviously on the 10 minutes, you had some good volume coming at 8:40 this morning.
Yeah, you do. You get 7,300 contracts, and then
but
see, the second time up was cool, because the second time was only 45.
Yes.
So what you'll probably get, folks, which is really cool, the next time up will probably be like 25, that'll be El Primo.
Yeah, and then you go ahead and you set up and you look for the a pullback. Whether it can do it by early afternoon or not, your levels are right around 1780, 1775, just normal 382 and 618 retracement levels.
So is there any nice reward versus risk setup, maybe a couple bucks higher, Daryl?
Yeah, what I'm looking at right now, I'm looking over at the scanner here. It's actually interesting. Usually I don't even trade this spread, but it's so high, just based on its little rocket move up there.
Yeah.
One consideration would actually be the master spread. It'd be the 1,700 to 1,800 daily 1,000-point wide spread.
I would think a great trade, for those folks that have gone over to the homepage of TFNN.com and signed up for their test account that they're test driving. I would think that gold and silver on Sunday evening would be the trade to take a look at.
Okay.
At putting on, because it's in, it's extended. It's in overbought territory. It should pull back, and I wouldn't want to necessarily take the using Nadex would be the way that I'd want to go ahead and take a short trade on something that has such strength, and that's what I would think might make a good trade for folks to. This is something that I could see gold and silver even decoupling from the market here for a couple of days. But those are my thoughts.
So definitely, I think there's some. Everything is like coming apart. Like we were talking about oil on Wednesday, it's totally coming apart from the market as well. So we got oil, transportations, like that. All the ags are falling. I mean, it's just been crazy.
I think oil has a good chance, Tom, to bounce up to about the $96 level. And it's only $3 away, so it's not a big move. But before it tries to move down again.
And that would be the nice position. There's no doubt, because what happens is that when you come down that fast, folks, bottom line, you're going to get some kind of a bounce. Hey, Larry, how'd you like that move on oil? Oh, we lose him?
Oh, he's back in the boat. I think he's polishing the boat.
Oh, that's too bad. Okay.
Yeah, go ahead and check out the gold daily 1,000-point wide spread.
Okay, go ahead.
And looking at selling that one right there, okay?
Oh, I'm sorry. I'll try to. Daryl, what did you want to look at? The bull spread or the?
Yeah, the bull spread. Yeah,
for gold. Okay.
Yeah, check that one out and get that one pulled up, and you'll notice it's trading right on par with gold too, which is perfect.
You stay right there, folks. Daryl Martin, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow up 44, Nasdaq up 18, S&P's up 5.5. We're going to be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 45, Nasdaq up 18, S&Ps are up 7.5. Don't forget, folks, coming next Saturday, September 29th at the Grand Hyatt in Tampa. Daryl Mott and myself, we're going to be doing a workshop. It's 8:30 in the morning to noontime, sponsored by Nadex. The workshop, folks, is absolutely free. So if you happen to be in the Tampa area, in the Orlando area, come on down. Go to the front page of our website at TFNN. You can sign up right here, right now. It's going to be 8:30 to noon, so check it out. Right now, we're talking with our man, Mr. Daryl Mott and Steve Rhodes, and we're setting up sell here in the gold contract. Take it away, guys.
All right, so yeah, we're looking right here at the gold contract. It's 1787 on the 1700 to 1800. So we can go in there and we can place that trade. You can place 1, you can place 20. The nice thing about the master spreads, and something that a lot of people don't know, is you can go in and you can make that trade, and it's on par with where gold is trading right now. So you don't have to worry about that whole, how far is it in the money, out of the money, how far does it have to move to break even?
Right.
I mean, it's right there, very, very close, if not right on the price of gold. It's basically straddling it right now, as you can see.
Okay.
And so if we click on the offer, or on the bid, click on the bid button right there. And that pulls right up. Yeah, he already put it in. Boom, done. And then you may want to adjust your price. Looks like you still have a working order. So you can click on the working order side, and it'll bring it back up. And, just put it in
Well,
right
just
there.
place 2 of these.
There you go. Yeah, go ahead and now click on the current bid price. That's what's going on. And then what it'll do is it'll update your price. Oh, you already did it. It was so fast that it didn't show up on the screen. And it'll update your price for you. So now you're short 2. Now, the other thing you can do is you could actually hedge your spread with a binary. Okay?
Mm-hmm.
So go over to the binary contracts. And we were talking earlier, you said, you thought it could go up. If it does go up, that it could, let's see here, let me pull mine up real quick, too, along with you. So,
1792 would be the spike.
Yeah, scroll down to commodities, binaries. It'll be down there at the bottom.
Got it.
And then, click on the gold, and then click on the word daily.
Got it.
And then you thought, if it does rally up, it could go to 1797. So look at the 1795 binary.
1792.
Or 1792. 1792 is a little more risky. You can put that one on. So 1792
I'm just saying
binary.
that's where I think it's going to go. I'm not.
Okay.
All
right. So, yeah. So go 1792. You could buy 2 of those. Okay. If it flies up, it'll make 140, which will more than cover your risk on your spread.
Got it.
So when you're at a level like gold is at right now, where you think there's definitely a big move coming, whether it be up or down,
okay,
then you can you can straddle it with 2 different spreads, but there's really not a good spread to straddle with on this. And sometimes your best option is just going in with a binary and putting that trade on. Now the other thing is the level we're looking at it going down to. We were talking about let's see, we're at 17. What are we at right now? We're at 1787. We're talking about 1777.
Yes.
So the other option, just to show you 2 different ways to play this, we have the spread on. You could also go in and you could sell the 1780, okay, binary. So buy 2 of those. That gives you how many ever you want of those. So you got 6 since you got you got 2. So yeah, you'll be more than enough hedge. And now the other thing is you can also sell the binary. So, and just to show you, sometimes people maybe don't want to take a $100 risk on a trade, okay? So you could go in and you could look at the 1777, or the 1780s, probably the 1780s, so that we have a little leeway there, with 1777 being your target. You sell those, you're going to be able to sell them for basically $80, okay? And, they're right there on the right side. I can see them on the screen.
And we will go over this whole thing of what we did, folks, for you. Oh, my God.
So, just go up to 1780, go over to the right side, and click on Bid.
Got it. Got it. Okay, so we're going to sell those 2?
Sell those 2, yeah.
So we bought the 1792s, we sold the 1780s, and we sold the spread at 1787.50, right?
Exactly, yep.
We're trading, baby.
Oh, man. Okay, so, Darryl, we got to walk through the money here.
Okay, all right. So let's walk through the money. All right, so we went in and we sold the gold December binaries just now.
Yeah.
Okay. And we sold them for, let's see here, let me move my screen so I can see your screen there. We got an average fill of $81.50. Okay. What that means is you can make $81.50 and you could lose basically, what is that, $18.50. Okay. Per spread. So he did 6 of them, so you're looking at risking, give or take $120.
Okay, hold on. Which one was this now? The 1780?
This is a 1780 sold binary.
Okay, good. I got it.
So you have a $120 risk on this trade. Okay?
Yep.
And your profit potential is $480.
Okay, and that's what happens there is that we need to close, folks, on the 1780. Okay, we got that one. Cool. Okay.
Exactly. Now, if it's moving down towards that, then your spread's making money also because we're also
that's
short
right.
the spread.
No, that's right.
So you could decide to actually close. If it gets to 1780, that binary is going to be worth $50.
Okay.
So anytime that the strike is at the same price as the current market,
yep,
the binary's value is 50.
Oh,
so,
cool. I got it. Okay. Oh,
so
that makes sense. Yeah, that makes sense. Okay.
Because it's 50-50 chance it'll be there at expiration.
Exactly, right.
So you could go, you know what, right now, like maybe you want to, if it gets down there, you're happy with the trade, right?
Right.
So you could go in and click on the little green arrow next to Gold December 1780 on your open position there. And it'll pop up a ticket in the opposite direction for you automatically. It'll fill everything in. So as soon as you click on that, and then what you want to do is now just update your price. Don't place the order. Update your price to 50.
I'm sorry?
Type in 50 in the price section right there.
Right there?
Yeah. And then hit place order. And one of the things we saw last week was these things get really volatile, right? I mean, they go like 2080, 2080, you know, and they start flying around.
Right.
So what you don't want to do is not have that on. It goes down. You could make money on that trade. That'd be 30 times 6, you know, so I mean, that's a pretty decent little profit there. And so you make, you know, $120, which also removes your risk on your gold trade here.
Right.
And covers the other side as well. But if it just pops down and touches that level and comes back up, you get filled, you make your money.
Yes.
So, biggest thing you don't want to do on a binary is wait till expiration.
Right. So that's on the 1780. Okay, so now let's do the buy of the 1792.
Okay, we're going to have to pull that one back up. We have not got filled on that. You want to go over to working orders?
Well, then, let's do the spread of 1787, 50 then.
Okay. So what you can do on that, here's also this is really helpful if you're trying to remember like how much you have at risk. Okay, so just a really good tip.
Yeah.
Act like you're going to open a closing order. Go ahead and click on that green arrow on the 1700, 1780. And when it pops up there, then change the direction. Okay, so you're not going to place the order. This is just so you can see it. Do the spread instead of the binary.
Yeah, that's a quick way. That's pretty cool. I got you. Right.
And yeah, so you can flip it around. You have the binary up there. There we go. Yeah. All right. Cool. And so now you can, since you sold it, now type in the price you got filled at. And if you move it over a little bit there, you'll see your average fill price on that line. So if you move the ticket about to the left or the right, either way. And you can see your average fill price. You can type in your average fill price. So your average fill price was 1787.4, so you can put in 1787.4. It'll automatically update your risk. Okay, so now you know I have a $252 risk. I have a $1,748 profit potential. Not a realistic profit potential. I mean, I don't see gold going to $1,700 today. But it lets you know like how much money could be made on that trade. And since we bought it at par, and we're talking about a move down about 10 points, okay?
Yeah.
Then we're basically talking about 10 points, 10.0 would be $100 times 2, so a $200 profit on the trade right now. So you could go ahead and click buy, and you could put 1777. And that way you'd have your take profit sitting in there for the spread as well.
And that would be pretty cool, because if it went down there, what would end up happening, folks, is that you'd have your trade, the binary would be closed at the 1780, which would get you the $120 back there, right?
Yep, and then you get your 200-something back on that one, and you'd also pocket, you know, $200. Yeah. So you basically be looking at about $300-400 profit on that trade.
And then, okay, so the last part of that would be the 1792. And folks, let me tell you something. You're not going to be doing all three of these. We're going through this so you can see these different scenarios. Okay, so you're going to basically be, you know.
You can trade the binaries, or you can trade the spreads. Get one of them down, then get the other one down, then figure out how to combine them.
Yeah.
But binaries are really, really simple. They're always worth $100, okay? So, you know, pop quiz out, everybody there in radio land, right? So if I'm risking 50 and it's worth 100, my profit potential is 50.
Right.
You know, if I'm risking 80, my profit potential is 20. If I'm risking 20, my profit potential is 80.
Right.
The risk and the reward always add up to $100. So if you ever open a ticket and look at one, the risk and reward will always equal $100. So that makes it nice and simple as far as knowing how that works.
Yes.
And then what you're doing on a binary is it's basically if you buy it, you're saying the statement is true. Okay, so click on offer, you're saying the statement's true. If you sell it, you're saying the statement is false. So in our case, on the binary that we sold, okay, we sold the 1780. So we said it will not be greater than 1780. All right. means it'll be, and this is really key, means it'll be equal to or less than is what we're saying at expiration. Now, we don't have to wait till expiration, but that is what we're saying. We're saying we think it'll be basically equal to 1780 or less than by selling it. And that's all you're saying when you say sell. I think it's going to be below there by expiration. Now, I may close it, like we're already planning to close it before then. Okay, as soon as it hits 1780, we're getting out in case it pops back up. All right? But it's very simple. I mean, it's buy means you think it's going to be true. Sell means you think it's going to be false. And the number one rule in binaries that I can't stress enough, and if you go back and watch last week's Bull Bear Binary Hour, you'll really see this, where we went in and these things get really, really, really volatile. And so you got to have a take profit order in there. But I mean, that's all there is to binaries. I mean, you either buy them or sell them. How far do you think it's going to go? And if you don't know and you just think it's going to go up, just buy the one that's right at the money, the one that's like $50. So, and I mean, you can see right now if we look at the 1786, I mean, it's basically $50. So with right in the midpoint on that bid and ask spread.
And folks, when you what will happen when you open the account is that the binaries, just as Daryl's saying, are easier because it's a yes or no. But you want to wrap your head around the spreads because the difference in the binaries is that you really are throwing the dice. And if you're one tick off, it's $0 you get. And if you're one tick over, it's $100. Okay.
Exactly. And that's why you don't want to ever wait till expiration.
No, you don't. And what ends up happening is that probability-wise, once you really wrap your head around it, though, yeah, I think the probability of consistency is that the spreads are 10 times better.
Oh yeah, and if we look at that gold trade that we just did on the spread side, we got to sell at where gold was currently trading.
Right.
Okay.
And we're already up good money.
Yeah, we're up good money on it already.
Right.
And, I mean, if you go back and look at the spread, like the strike that we sold, or the price that we sold at, if it expires there, we get all our money back.
Right.
And if it expires anywhere between there and what's called the ceiling, okay, of the spread, we get some of our money back. So it's not an all or nothing. Binaries are all or nothing. So if it expires anywhere between here and 1800, okay, or anywhere between 1787 and 1800, then we're going to get some of our money back.
Right.
If it expires below 1787.4 there, then that's just profit. But we don't have that all or nothing scenario. And really the spreads, if you're already a trader and you know how to trade stocks, ETFs, futures, forex, any of the above, then spreads really are your game because they're just like the underlying market.
Right.
But the big thing you always stress is you cannot get stopped out of your trade. You have basically the spread builds your stop loss in, so your losses stop, but your trade doesn't stop. So you get to wait until expiration. So the thing spiked up to, let's just say, because that'd be a 10-point risk normally, if you got in on that trade.
Sure.
13-point risk. So if it spikes up to like 1795, you'd probably be getting out of the gold trade, like if you were short. And this trade, but then it comes back down, you actually still can make money. So if you learn to trade the spreads, you literally will never have to suffer another whipsaw again in your trading career.
Yeah, it's huge. And folks, we got a seller in the gold market right now. I think it's this guy from Colorado. He just came in from his bike ride. And he just said, Ben, he says, I got to sell this thing.
And like I said, it bounced off that deviation level, too. I go over those every week, and the bike rider hit it and fell off his bike. But we're constantly having that hit there. And, I mean, there's just a lot of weird setups. I mean, so you're talking about the transportations in the Dow. We're talking about the oil. What is your take on it? Steve, I'm just curious to hear, what do you think about all this? Like, these divergences that are happening that we've been seeing. Like,
he's got his horns on. He's got 8 horns. He's a roaring bull.
I'll give you divergence. I gave it to the audience this morning at 9 o'clock. And it's really, take a look at the GE chart. The GE chart is really cool with regard to identifying divergence and when the market's going to turn. We'll talk about it when we come back.
All right.
Stay right there, folks. Daryl Martin, Steve Rhodes, Tom O'Brien. Don't forget, folks, come over to our website at TFNN. You're going to see the special paper Steve just did on candlestick charts. We're going to be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darryl Martin, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. And I'll tell you, folks, okay, there's nothing like it. Bottom line, right when we were doing that commercial, guess what? Gold went to $17.75, crushed. Okay, we're at $17.78 right now. Great work, guys. Pretty amazing, actually.
Yeah, you know, it's just part of taking a look at the patterns that are out there. And when you get to those extended areas, it becomes pretty easy to take the trade because it's going to bust topside or downside.
Yep.
I mean, look, it could always move sideways, but at some point in time, it's gonna bust, and we just simply know. Look, I don't know. None of us know necessarily how how Leonardo Fibonacci came up with all this stuff, but we just know the price moves to those areas. So it was pretty easy to say, hey, 1777 would be a first target.
And let me tell you something, folks. Okay, what you had is this. Someone just hit this thing with 8,700 contracts, and the 10 minutes not even over.
Hey,
gold is going
to... That's really me on the other side of the trade.
That's a beautiful thing, man. I like that. And you know, when we were talking a little bit later, so the master spread is still on, and the master spread's in the big money right now, but, you know, we said a little bit later, well, it didn't, you know, the 1777 was a good number, there's no doubt, but guess what, folks? This thing can get down to 1760 in a heartbeat now. There's nothing like a Friday in the gold market, okay? Let me tell you something. Fridays in the gold market, folks, is that you want the yin, you want the yang. You know, they can bust it up, they can bust it down, but this level here, particularly it's only 10:56 right now, you get another hour and a half of volatility, so there's some real action here, man.
Yeah, I think a huge point to make right here, that kind of move is why you trade Nadex.
Right.
Because if you were long, because you're like, you know what, I think gold may go ahead and move up from here, you would have just got the crap kicked out of you.
Yeah, totally.
Because, I mean, your stop wouldn't have got filled, okay? You definitely would have gapped right past you. And, I mean, that's just, I can't, like, that is why you trade Nadex.
And this is going to be, folks, this is going to be unbelievable. Because let me tell you something, right? The gold market, okay, loves to move. And when it moves like this, what will happen is that the acceleration will be dramatic today. You know, right now it's at 1775. Give it 3 more minutes, you'll be at 1770. Give it 10 more minutes, and you're going to be at 1761. It's just amazing. This market just blows my mind, particularly when you have this type of move with this type of volume behind the move, man. It's over. And well, it did what it was supposed to do. It got to 1790, and 1792 is the number. So it's like, okay, man. Do you know what I mean? You gotta love it, man. There's no doubt about it. Folks, if you haven't opened a Nadex account yet, come over to our website at TFNN. Open the account. It'll put $25,000 of funny money in it, and you'll see how these spreads work, okay? And as Darryl just said, this is the ultimate to really understand that your trade is your stop. That's the key behind, I think that's one of the biggest keys behind what Nadex has put together. I know.
Yeah, if you would have long there, you would have just got that crap. It's just like oil. You know, I mean, had those 4 and 5 point moves in a matter of 3-point move in less than a minute.
Yeah.
I mean, I know traders who got wiped out and traders who made a lot of money. And if you're on Nadex, you didn't get wiped out, even if you didn't make money.
Totally. So. And folks, if you happen to be in the Florida area, well, come to our workshop next week, because what we're going to set up is just what we set up there. We're going to set up, I'm going to be doing where the swing point is, what we're looking for. Darryl's going to be setting up the strategy on the other side. We talk about risk reward. We talk about money management and probability. Well, you're going to get it wrapped up, and Nadex is basically, well, Nadex is paying the bill. That's the bottom line, folks. So if you want a great workshop, it's next Saturday. You can sign up on the front page of TFNN. Darryl Martin, Steve Rhodes, thanks so much, guys. You have a great one, safe one. And don't forget, folks, Darryl's going to be coming back at 1 o'clock, 1 to 2 each and every trading day.
Every weekend, folks.
Have a great one, man. Have a safe one.
All right. Y'all have a great weekend.